Today we are discussing a new chapter of accountancy for 11th standard. Bank reconciliation statement. Bank reconciliation statement. What is a bank reconciliation statement? Bank reconciliation statement. See, suppose you have an account with the bank and you are running a small business. So, since you are having an account with a bank and you are running a business, so on the day-to-day activities of the business, you will be having many transactions. That involves banking transaction also. So you will be issuing the checks to your customers or suppliers, and you will be getting the check from your customers. So all the various transactions will be there. So normally there will be a time when you will be checking your account balance with your cash book and your passbook. Suppose on a fine day, on a particular day, you have checked your bank column of your cash book, which shows that the bank account or bank column of your cash book shows that 1,90,500. 1,90,500. Where it shows the cash book. Cash book means bank column of your cash book. Double column cash book we have studied, and in the double column cash book, your bank balance shows that 1,90,500. And you have a passbook. What is a passbook? Passbook is the statement, or passbook is the account details of a bank. Bank gives the copy of the bank account to us, that is called the passbook. But on the same day, when you check the passbook balance, you are showing around 1,60,500 on the same day. Okay, will it be possible? Suppose this you have checked on February 25. On February 25, the bank column of your cash book shows that 1,90,500. But the passbook which is given from your bank, there the total balance is 1,60,000. So there may be chances of differences in the bank balance shown in the cash book which you have prepared and the bank passbook which is the copy of the bank account. Okay, so there are chances that we will discuss what are the situations of differences showing in the cash book balance and the passbook balance. So there will be differences. In order to check those differences, or in order to rectify that difference or mistake, it may not be a mistake, it will be due to various situations. In order to rectify or reconcile the cash book balance with the passbook balance, you prepare a statement that is called a bank reconciliation statement. You can prepare a statement to reconcile the balance shown in the cash book and the balance shown in passbook. So that is called a bank reconciliation statement. So we can explain a bank reconciliation statement as it's the statement prepared by the customer of a bank to reconcile the balance as per cash book and the balance as per passbook on a particular page. Okay, we can explain bank reconciliation statement in this way. Who prepares the bank reconciliation statement? Never the bank. It will be prepared by the customer of the bank. Because customer only wants to know that what are the reason for the disagreement in cash book balance and passbook balance. So, bank reconciliation statement is a statement prepared by the customer of a bank to reconcile the balance as per the cash book with the balance as per the passbook. Okay, we can say that reconcile the balance as per the cash book with the balance as per the passbook on a particular date, and to find out the reason for the difference. Okay, so this is a statement prepared by the customer of a bank. Customer of a bank to reconcile the balance as per cash book. Balance as per cash book. Balance as per cash book. Here in this chapter, wherever if we say cash book, it means that the bank column of a double column cash book. Bank column of a double column cash book. In that column, what entries are written? Entries related to the banks are written. Isn't it? Entries related to the bank account is written, and the balance shows that what balance is there in the bank account. So, reconcile the balance as per the cash book and the balance as per the passbook. Here in this chapter, wherever it is a passbook, it means that it is what? Bank account. Passbook is the copy of bank account. What is there in the bank account? Exact copy of that is passbook. So this is the statement prepared by the customer of a bank to reconcile the balance as per the cash book with the balance as per the passbook. When it will be prepared on a particular date, and that shows on a particular date what is the balance in cash book and what is the balance in passbook. That should be rectified or reconciled. That means adjusting the difference. Reconciliation means adjusting the difference. And to find out, we can find out what can be found out. What can be found out? The reason for the difference or reason for the disagreement. Okay. So for that purpose, a statement is prepared by a customer of a bank. That statement is called the bank reconciliation statement. Okay. Now let us see what are the reasons for the disagreement in balance as per cash book and balance as per passbook. What are the reasons for the disagreement, or what are the reasons for preparation of bank reconciliation statement? Reasons for the disagreement or difference in the balance of cash book and balance of passbook. That means cash book we have told the bank column of the cash book which is maintained by us or the businessman, and passbook is the copy of bank account. So there are reasons for disagreement or difference in the balance shown in both the accounts on a particular page. The reasons are because of certain time differences and due to certain errors. Okay, two types of reasons are there. Various reasons, different reasons due to time difference and errors. Let us discuss what are the reasons for due to time difference. Reasons due to time difference. Reasons due to time difference. Let us explain a point. Here, a check is issued by the bank but not yet presented for payment. A check issued but not yet presented for payment. For example, 2020 March 31st, we are checking the passbook balance and cash book balance. We are checking the balance of passbook and cash book balance on March 31st. On that day, there was a difference. Suppose there was a difference of 10,000. There was a difference of 10,000. And we have issued a check. Means our business has issued a check to our customer. This is issued on February 25. For rupees 10,000. When we issue a check to the customer, in our cash book we will make it as a payment. We will write it as a payment. Means balance will decrease. Cash book balance will decrease. So on the same day, bank will not deduct the money. When the bank will deduct? When this customer brings the check to our bank and withdraw the money. Customer has to bring this check to the bank and get the money from the bank. No? So that time only bank will deduct the money. But here the situation is that we issued the check, but our customer did not go to the bank and withdraw the money. So what will be the position? In the bank account, this up to 31st March, the customer did not go to the bank and withdraw the money. So in the bank account, bank balance will be more, but in our cash account balance will be less. Because we have already deducted, but till 31st March, the customer has not gone to the bank and withdraw the money. So the bank balance will be more than cash balance. Okay. Then another situation. The second point we can say that check paid into the bank but not yet collected. Check paid into the bank. But not yet collected. Check paid into the bank but not yet collected. What do you mean by check paid into the bank and not yet collected? Suppose we have received a check from our customer. First we issued a check to the customer, means maybe the supplier. First case we have to pay money to the supplier. For them we have issued the check, but they have not presented the check for payment. Here in this case, we have sold the goods to customers, and from the customer we have received a check. We received a check. The business received a check. And that check is deposited into bank. When the check is deposited into bank, what we will think? Oh, money has come into the bank account. Suppose customer has given us a check for 20,000 rupees. That 20,000 rupees check is deposited into bank. So what we will do? We will show it as a receipt, isn't it? For example, February 25, we received a check. On the same day, we deposited that check in the bank. So what we will do? In the bank column of receipt side of the bank column, we will write what the customer is done, that this much money is collected from customer. Okay. So we have shown this as an income in our cash book. But what happened? What the bank will do? Bank will go with this check into the concerned bank from where the check is come. For example, our bank account is in State Bank of India, but the check we received is Bank of Baroda. Check we received is from Bank of Baroda. So when we deposited the check into our bank, it came into State Bank of India. So what the State Bank of India will do? This will be sent into Bank of Baroda. This check will be sent into Bank of Baroda because it is the check of Bank of Baroda, and we will ask it to give the money. And Bank of Baroda will give the money and credit that into our account. Bank of Baroda will direct the money from our customer's account and credit that into our account. So for this it will take some time. Sometimes it may take for 1 week. So the check will be deposited on 25th. But on 31st March, till 31st March, this check was not cleared from Bank of Baroda. Okay, the money was not collected. So in that case also difference will be there. That also due to time difference. So check is paid into bank but not yet collected. Another one is debit or direct debit made by the bank on behalf of the customer. Direct debit made by the bank on behalf of customer. Direct debit made by the bank on behalf of the customer. Direct debit made by the bank means bank decreases the money. Bank account has a credit balance. Bank account always has a credit balance. If we have money in bank account has credit balance. Here bank debited money means bank decreased the money. Suppose we have given an instruction to our bank that every month on 26th you have to pay our rent. We are running our business in a rented building, so we have to pay the rent. Bank has to pay the rent on every 26th. Okay, according to our instruction, bank decreases the money. Bank debit the money every month. Or like that, we may have instructed the bank to pay the insurance premium. Okay, so suppose on 26th the bank deducted that insurance premium or rent. 26th it is deducted. But it was not informed to us, or we did not come to know that, so that expense was not deducted in our cash flow. So in that case also there will be differences. Okay. Then another one, interest and dividend collected by the bank. Interest and dividend interest and dividend collected by the bank. Bank receives interest or dividend for and credit that into our account. Suppose we have another investment and that investment will get an interest. Suppose we have invested money into some debentures or something, So the company gives interest. There, for that company, we have given our bank account and informed that money should be credited in our bank account. So in that way, company credited interest in our bank account. So where it will be shown in the passbook, it will be shown. Since we did not know that it was credited or not, it will not be shown in the cash book. In the same way, if we get any dividend from any shares, money invested in shares, that money also, that dividend also will be credited to the bank account, but we will not be knowing that it was credited or not. So that difference will be there. Okay. The next we can say that, fifth point we can say that direct payments made by the bank on behalf of the customers. Direct payments made by the bank. Here we have taken direct payment we can take here, because we have told regarding payment of interest and payment of insurance premium or something like that. Here it says another one, direct debit made by the bank. Direct debit made by the bank, or bank made some debit in the cash or passbook. When it happens, here we have told, third point we have told regarding direct payment of insurance premium or in this rent or something like that. Here direct debit. That means sometimes bank debit some money. For example, we have deposited our customers check into bank, and bank has to collect the money from the Bank of Baroda. We have told. So for that collection charges, bank will charge an amount. For doing that work, bank will charge an amount. That is normally called as bank charges. Okay. So if we have sent a DD, demand draft to somebody, for that also bank charges some money. Or if we have taken overdraft from the bank, bank will charge an interest for overdraft. So all these will be called as bank charges, and that amount will be debited in the bank account. But we will not be knowing that whether how much amount is debited or whether it is debited or not, will not be knowing to us. Okay, so in that case also there will be differences between bank passbook and or cash book. Okay, then the last point of time difference, we can state that check deposited but disowned, or bill discounted disowned. Check deposited or bills discounted disowned. So we have told that our customers check we have deposited and that should be collected from Bank of Baroda. And bank went for collecting the money from the Bank of Baroda. At the time when bank entered, the bank informed that, Bank of Baroda informed that there is no money in the account. So what will be done? The check will be disowned. Check will be returned, stating that there is no money. That is called check disowned. So we have recorded that in our cash book we received some money. We received 20,000 rupees. That we have recorded in the cash book. But when the bank went to collect the money, Bank of Baroda told that there is no money in the bank account. So in that case, what will happen? That money will not be credited because what? Check disowned. So in that case, in check disowned case, there will be difference. Like that bill discounted. Like check the customer given a bill. Customer accepted a bill. Because of immediate need of money, we discounted the bill into the bank. Discounting of bill of exchange, once in the last video we have told. So like that we have we discounted the bill with the bank for immediate money. Bank will given the money also. Okay, so that is credited in the bank account. Now, when the bank went with the bill to the customer, here there he is saying that there is no money to him. So what will be done? That bill will be discounted. It will be called as bill discounted, dishonored. Okay, so that discount, that money bill discounted is dishonored. So money bank will collect back the money which is given to us. Okay, bank will get back the money which is given to us. Then we will decrease the money. So in the bank account passbook, bank decreases the money, and in the cash book, we did not know that, so we did not decrease the money. So there will be difference. Then second case, errors committed due to errors. Okay, there are two chances of errors. One is errors committed by the staff of the customer in account. Errors committed by the business staff. That means the customer's staff while accounting the passbook or recording entries in the passbook, some mistake happened with the customer's range. In that case, there will be difference. Okay. Another one, same way, errors committed by the bank staff. Okay, errors committed by the bank staff in entering business transaction. So if any error happens from the bank's end, then also there is chance of difference in the that passbook balance and cash book balance. Okay, so this is regarding the reasons. Now let us see what are the different cases of preparing bank reconciliation statement. Now discussing the ways of preparing bank reconciliation statements. So we have told that we have to always remember that cash book and passbook. Cash book and passbook. Cash book means the bank column of the double column cash book which is prepared by the business. Passbook means the copy of bank account that is given by the bank. These two things must be there. Okay. So let us see what are the different ways of preparing bank reconciliation statements. We can prepare bank reconciliation statements in two ways. One, without adjusting the cash book. Without adjusting the cash book, and another way, after adjusting the cash book. Okay, so before adjusting the cash book also we can prepare the bank reconciliation statement, and after adjusting the cash book also we can prepare the bank reconciliation statement. Here we will be discussing four different cases of preparation of bank reconciliation statement before adjusting the cash book. Okay, or before making the adjusting entries, how we can prepare the bank reconciliation statement. For that there are four ways. See, we have bank passbook and cash book. So a cash book if we have, it will have a balance. So the first case we can say that preparing bank reconciliation statement with the balance as per cash book. Like that passbook is there with us. So that is the second case. Preparing bank reconciliation statement by taking balance as per passbook. Two cases. And like that, in the cash book, instead of favorable balance, there may be an adverse balance. There may be an overdraft balance. So the third case comes there. Preparing bank reconciliation statement by taking overdraft balance as per cash flow. So you understand the fourth one, what it is? Overdraft balance as per the past. So preparing bank reconciliation statement as per or by taking balance or overdraft balance as per past. So these are the four phases. Let us list that. By balance as per cash book. Second one, that means by taking balance as per cash book. Then second one, by taking balance as per passbook. Third one, by taking, here the balance means favorable balance. That means in cash book it will be debit balance, and the favorable balance in the passbook it will be credit balance. So here by taking overdraft balance as per cash book. If it was overdraft balance, if that balance also we can prepare. And next one, by taking overdraft balance as per passbook. Okay. So these are the four different ways of preparing bank reconciliation statement. Let us discuss the preparation of bank reconciliation statement on the basis of the first method. Now we are discussing the preparation of bank reconciliation statement with the balance as per cash book. So in this method, by taking the balance as per cash book, how we can prepare the bank reconciliation statement? That we can see by preparing or solving a question. Okay, let us solve the question. So here we have a question, and we have given the bank balance as per cash book. Bank balance as per cash book, and preparation of bank reconciliation statement with the balance as per cash book. Okay. Now how can it be prepared? So let us draw the format of a bank reconciliation statement. We are preparing the bank reconciliation statement like this. You can prepare even with the same single amount column. Here we are writing particulars. Here plus amount. Here minus amount. So on top we can write the heading bank reconciliation statement. Now let us see the condition. We are starting with the cash book balance. So since we start with the cash book balance, we have to get the bank balance. We have to get the bank balance. Let us see the first one. Check issued but not presented for payment. Check issued but not presented for payment. We issued a check, means we deducted that money. If we issued a check, it means that it is expense. Expense shown in cash book. That expense is shown in cash book. Okay, but that was not presented for payment. That means this expense was not shown in the passbook. Expense was not shown in the passbook. So bank balance is more. Isn't it? So since we are starting with the balance as per cash book, we have to get what we have to get the balance as per passbook. For that, what can be done? The expense we have deducted should be added, because since we deducted the expense, balance as per the cash book is less, but this expense is not shown in the passbook, so the balance is more there. So this balance we have to add. We have to add the what? Expense. So we can write expense shown more in cash book. What to do? It can be added. Okay. Next, check issued. Sorry, the bank has directly collected dividends. Bank has directly collected the dividends. So, bank directly collected the dividend means their income is shown more. Where? In the passbook. In passbook, income is shown more. Income when is shown in more in passbook, it means that their bank balance will be more. So here it is less, where in cash book it is less. So in order to get passbook balance which is more, we have to add here. What to be added? Income shown more in passbook. Or we can write income shown in passbook. Passbook should be added. Okay, so these two items we have added. Next let us see bank charges. Bank charges 400 were not entered in cash book. Means bank charges taken in passbook. In passbook, bank deducted some money. Here in our cash book, which is not deducted, so the cash book balance will be more, and passbook balance is less. So in order to get that balance, what to do? We have to deduct. What to deduct? Expense shown more in passbook should be deducted. Expense shown more in passbook should be deducted. Another case, check of rupees 6,000 was deposited but not collected by the bank. Check deposited. We deposited a check of rupees 6,000 to bank. At that time, what we will do? We will consider it as income and will be shown in the cash book. So in cash book, income is more, but it is not collected by the bank, so their income is less. So their passbook balance is less. So cash book balance is more, passbook balance is less. What to do? We have to deduct. Okay, what to deduct? Income shown more in cash book. We have to deduct. Okay, so this is the common method, common formula we can use for bank reconciliation statement. In all the cases, the same thing can be made. Only the balance position will be mentioned. Here, cash book balance we will show here. Cash book balance will be in the debit side or the added side. Okay, along with the cash book balance, what should be done? Along with the cash book balance if it is shown here, we can add it like this: expense shown more in cash book. Expense shown in cash book can be added, and income shown in passbook can be added. These two items can be added: expense shown in cash book and income shown in passbook. Like that, two items will be deducted: expense shown more in passbook and income shown more in cash book. Let it be here as a formula for making bank reconciliation statement. With the same formula, we can solve all the four methods. Okay. Now, let us see the actual bank reconciliation statement in this case. Actual bank reconciliation statement we are preparing. So, how can prepare? Here we will write plus amount, here minus amount, and here particulars. Okay, so how to prepare? First we will write balance as per cash book. That should be taken here 15,000 taken. Then next, check issued but not presented for payment. Expense. Check issued means expense. Expense shown in cash book, but it is not presented, so expense is not shown in passbook. So that expense 5,000 expense is shown more in cash book, not 5,000. 6,000 expense is shown more in cash book. That can be added, but we will not write in the same sentence. We have to write what is there in the question. Okay, check issued but not presented for payment. Check issued but not presented for payment. How much? 6,000. It can be added. Okay. Then next, third one, bank had directly collected dividend. That means income shown in passbook. So income shown in passbook also, passbook will be more. We have to get that passbook balance, that also can be added here. So that is income shown in passbook. That what is that income? Bank had collected directly collected dividend. So dividend is collected directly by the bank. Dividend collected directly by the bank. How much? 8,000. Okay. Then bank charges 400 were not entered in cash book. Bank charges, expense shown in passbook. Expense shown in passbook can be deducted. So bank charges. Bank charges not shown in cash book. How much? 400 rupees. Then the last point, check of rupees 6,000 was deposited but not collected by the bank. That means income shown in cash book. Check deposited. Since we deposited the check, we have shown it as an income. So income shown but not shown in the passbook. Check deposited but not collected. Not collected by the bank. How much? 6,000. 6,000. So which column is more? We can find it out. Here 56,000 plus 8,000. Total 64,000. 64,000. This 64,000 can be taken here. Okay. 64,000 minus 6,400. What it is? 57,600. Okay, 57,600 is the balance. Which balance? When we start balance as per cash book, we will get the balance as per passbook. So that is the balance we can write here. Balance as per passbook. Okay, so this is the method of preparing bank reconciliation statement, starting with balance as per cash book. Okay, now let us prepare a question starting with the preparation of bank reconciliation, starting with the balance as per passbook. Okay. Yes, here we have a question. Measures Bose and Co. showed a balance of rupees 45,000 on May 31st, 2020. Here shown a balance 45,000. Passbook balance is given. Passbook balance 45,000 is there. That means we have to start the bank reconciliation statement with the balance as per the passbook. Okay. So we have a bank reconciliation statement. The formula we have developed and that is there here. There we have taken cash book balance here. Now when we change it to the bank passbook balance, we need to make only one change here. So instead of here making here cash book balance, we can make passbook balance, but the balance will be shown in the negative or minus. Okay. See, cash book balance is there. Cash book balance will be having a debit balance. Cash book will have a debit balance if it is favorable balance. So by assuming that, suppose you can assume this is debit column. So that cash book balance we have taken in the plus. And the bank balance, if you have a bank account and it has a favorable balance, it will have a credit balance. So all the credit balance you can take in the negative column. The thing is simple. Then you can solve any type of bank reconciliation. Once again, if there is favorable balance in cash book, it means that debit balance we have taken the plus column. So here you can assume that this is always for debit balance, this is always for credit balance. For assumption you can take. So all the debit balance can be taken in the plus column, all the credit balance can be taken in the negative column. Here balance as per passbook. Passbook means bank account. So in the bank account we will have a credit balance. We can take that credit balance here. This passbook balance we have taken in the negative. So credit balance will take here in the negative column, 45,000. Then next you see the first adjustment. Check issued before May 2020. We are preparing it on May 31st, 2020. We issued a check before that date. Okay, for rupees 25,940, but has been presented for encashment. That the remaining is not written. Encashment on file, but has not been presented on. Here it is not been presented. It is given, so no need to write this. Let us see. Check issued before May 31st, 2020, amounting to rupees 25,940. Had not been presented for encashment. Means it is not presented for payment on May 31st or before that. Means still it is not presented. So what to do? Check issued but not presented. Expense shown in cash book. Isn't it? Expense shown in cash book can be added. So we can write check issued but not presented for payment. How much? 25,940. The next, two checks of rupees 3,900 and 2,350 were deposited into bank on May 31st. May 31st we deposited, but the bank gave credit on June only. Bank credited that in June. Means check deposited but not collected or not credited. Check deposited means income. Income shown in cash book. Income shown in cash book. What to do? Less. So check deposited but not credited. Check deposited but not credited. 3,900 and 2,350. So 6,850. 6,850. Is it right? 6,850. Okay. The next, the third one, there was a a debit in the passbook 2500. There was a debit in the passbook 2500 in respect of check disowning. That means passbook debit means bank charges, expense for dishonored check. We can write that expense shown in passbook should be credited. So we will write here bank charges on dishonored. How much? 2500. Okay. So here we can add 54,350. 54,350. Okay, right? So here we have made a mistake. It is not 6,850. It is 6,250. So it will be 750, 53,750. Okay, 53,750. So then we can take here 53,750. So 0, 1. So we will get 27,810. Okay, 27,810. But this is balance as per cash. That means if we start with the balance as per passbook, we will get balance as per cash. Is it clear? Okay. Now let us see the third case. Let us prepare a question from the third case. Okay. So here is the question. On 31st March 2020, the bank column of the cash book showed a credit balance. See, bank column of cash book shows a credit balance. Cash book shows a credit balance means cash book shows an overdraft balance. Cash book, if it is favorable balance, it will be a debit balance. So here it is showing a credit balance means that it is a unfavorable balance or overdraft balance. So balance as per cash book, that is overdraft balance. So overdraft balance is credit balance, so can be shown in the negative. So same way we can take that here. Overdraft balance as per cash book. How much? 1,18,000. Okay. Then check received and recorded in the cash book but not sent it to the bank. Check received and credited in the cash book. We received a check, so it's an income. Income shown in cash book but not presented to the bank. Means that income is not shown in the passbook. So income shown in cash book. Income shown in cash book. Here it is. What to do? It should be deducted. So check credited in cash book but not send it to bank. Not send it to bank. How much? 12,400. 12,400. Then next. Amount received from a customer directly by the bank. Means our customer deposited money directly into bank. Means income shown in passbook. Income shown in passbook. What to do? It should be added. That means customer deposited directly into bank. How much? 27,300. 27,300. Income shown in passbook is added. Then next, check issued for 1,75,200 but not presented for payment. It is expense. Check issued expense shown in cash book. Expense shown in cash book. So check issued but not presented for payment. How much? Expense shown in cash book can be added. 1,75,200. Then next, interest of rupees 8,800 charged by the bank. Why bank charges interest? Because of overdraft. We have overdraft, for that interest is charged by the bank. So it's an expense to us. Expense shown in passbook, but it is not credited in, or it is not entered in cash book. Expense shown in passbook. Expense shown in passbook can be deducted. So interest on overdraft charged by bank. How much? 8,800. So here debit and plus amount column is more. Two lakh 2,500 minus column. So 8 plus 4 12 plus 3 15 balance 1, 9 plus 2 11 plus 8 21 minus 21 plus 3. Okay, so 9 plus 2 11 plus 8 9, 9 plus 3 12, balance 1 2 3, 3 plus 63,300. Okay, 63,200 will be the 63,300. Okay, so that is balance as per what it is passbook. Balance as per passbook. Okay, so that is the end of this question. Now let us see the next problem. Okay, here is our next question, starting with the overdraft balance as per passbook. So following particulars of Ashan Company prepare bank reconciliation statement on 31st December 2019. Overdraft as per passbook. Overdraft as per passbook is given. So we can make balance as per passbook, which is overdraft. Overdraft balance of passbook will be on the added column, because passbook, if it has overdraft, it will be in the debit column. So we have told that all the debit balances can be shown, the amount added. So here we can write overdraft balance as per passbook. How much? 20,000. Interest on overdraft, it's an expense. Interest on overdraft, who will charge? Bank will charge. So expense charged by bank. Expense shown more in passbook interest on overdraft. Interest on overdraft can be deducted 2000. Then insurance premium paid by the bank is also expense paid by bank. Expense shown in passbook can be deducted. Insurance premium paid by bank. How much? 200 rupees. Then check issued but not presented for payment. Check issued but not presented for payment. That means expense. Check issued means expense shown in cash book. So expense shown in cash book can be added. Check issued but not presented for payment. How much? 6,500. Then check deposited but not yet cleared. Check deposited but not yet cleared. Check deposited means income shown in cash book. While depositing the check, it will be shown as an income in cash book, but since it is not yet cleared, it will not be shown as an income in passbook. So income shown in cash book. Income shown in cash book should be deducted. Okay, check deposited but not cleared. Income shown in cash book. How much? 6,000. Okay, income shown in cash book is deducted. Then wrongly debited by the bank. Wrongly debited means wrongly shown as an expense. Anyway shown as an expense. Expense shown in bank. So wrongly debited by bank. Expense shown in bank column can be added. 500 will be added. Okay, so two debits are there in bank, one 500 and another one 6,500. Okay, or insurance premium paid by the bank 200. So insurance premium paid by bank, expense shown in bank account. Expense shown in bank we have deducted. Then like expense debited by the bank also expense only. So expense shown in passbook, it should be in the credit side. Once again let us see. Insurance premium paid, interest on overdraft. Interest on overdraft is expense. Expense shown in passbook, it should be deducted. Deducted we have deducted. Then insurance premium paid, that also expense shown in passbook, deducted. Then check issued but not presented for payment. Expense shown in cash book. Expense shown in cash book. What is that? Expense shown in cash book is added. Then check deposited but not cleared. Check deposited but not cleared means income shown in cash book. Income shown in cash book should be deducted. So 6,000 is deducted and wrongly debited by the bank means expense shown in passbook should be deducted. So these are the items. So let us add 26,500. 26,500 can be taken here. Plus 8, 15. Balance 1, 3. Plus 6, 9. 9 plus 7, 16. Then balance 1. 1 plus 1, 2. So 17,800. What it is? That is balance as per cash book. Balance as per cash book in the credit side will be overdraft balance. Overdraft balance as per cash book. That is the balance we have got. So this is the simplest way of preparing bank reconciliation statement in all the 4 cases. Only one thing you have to remember, all the debit balance can be taken here and by keeping the formula like this, and all the credit balance can be taken in the negative column. Then what are the which are the debit balances? Debit balances are favorable balance of cash book and overdraft balance of passbook. Then which are the credit balances? Credit balances are favorable balance of passbook and overdraft balance of cash book. These are the credit balances. This can be, debit balance can be shown in plus amount column. This can be shown in minus amount column. Okay, so this is the way we have solved only one questions in each cases. You can solve many questions from various reference books and can make it clear. Okay, I hope it is very clear to you all, and try to solve maximum questions from your reference books. Okay, thank you.